What's up, guys? Do you ever wonder why it seems like you're priced out of the housing market? Like, no matter what you do, no matter how much money you save, it just seems like you can never really get into owning a home. Well, today I actually invited my twin brother on, who is a licensed real estate agent, to talk a little bit about this phenomenon, what that means for investors, what that means for people like you who are looking to buy a single family home, and how interest rates factor into all of this. So, Blake, if you could go ahead and start off and introduce yourself and then talk a little bit about how interest rates often impact home values and vice versa.
Yeah, no problem. So I'm Blake Rydell. I'm a real estate agent in Florida. So primarily when we're talking about home prices, the main thing that pushes up home prices is supply and demand. So currently right now we see that there's actually a shortage of livable homes, especially in certain hotspots and areas throughout the country. With that being said, the more demand there is, the more people want to move there. And the more people want to move there, the higher the prices go. So that's the first thing, number one, that's keeping a lot of you guys out of houses. That's the fact that there's too little amount of houses available per person that wants to move into that area. But the second thing that's happening is interest rates are climbing. So what a lot of people don't understand is when you get a loan out on a home, you actually have to pay interest on that home. And that's a percentage of whatever that value of loan is. So, for example, when I bought my house 3 years ago, I was able to put down 10% and get a 3% loan. Nowadays, a lot of banks are actually requiring a 20% down conventional loan. And with the average, home price rising, we're looking at a pretty decent amount of money that people are needing to put down. We can, 50, $60,000, depending on the type of home. And then in addition, these consumers that are getting these loans have to pay at least 6% right now, currently
Oh
July 2023. And so that means that realistically, they're paying $10,000 to $15,000 more on their house payment every single year, just in interest, not even paying down what they owe. So
That's
that's
amazing. A matter of
yeah,
fact, I'm just going to cut you off right there. I think that you really touched on a key important principle to this, which is that the down payments themselves are already so large. It's like you would have to work for 3, 4, 5 years on, the average working person's salary,
yeah,
especially if you're a single mother or father trying to raise a family. That's nearly impossible, and it almost puts you out of the ballpark entirely to get a home just based on that. And then, like you said, every single time that the Fed raises rates, not only does that make the loan requirements that much more stringent because banks don't want to lose money, but they also look at that and they say, okay, let's keep on raising the rates to make sure that we can obviously make profit off of the money that the Fed gives to us. We need to
right,
make money giving it to you. So it really trickles
exactly.
down to the consumer being really someone who is penalized. Would you agree with that?
Yeah, the consumer is definitely being penalized. Basically, you explained it perfectly, but what's happening is banks are borrowing money from the Federal Reserve, which manages the amount of money that we print or lend and the amount of money that we have in our overall economy. And so from there, these banks have to make a certain percentage and able to be, to be profitable. So if they're
Yeah.
borrowing money at 6%, they might have to lend it at 8% or 7%. Basically, they have to make their margin to be able to operate and function. And so, again, what you said is absolutely correct. It is definitely hurting consumers. I saw an article the other day, actually, about a young woman who was a teacher with a daughter, and she was struggling to be able to save up enough money to have a down payment to even be able to try to squeeze into the housing market. So at that same time, she's struggling saving money for the down payment. And if you aren't aware, rents have been going up through the roof as well. So I was reading in this article, the average
Yeah.
rent price rose by 15% in 2022. It also rose by about the same margin the year prior. And the average, or I shouldn't say average, the median rent price in the United States is $1,320, which is a lot. So basically, what's happening is, either way you look as a consumer, you're either paying the price on the interest or you're paying the price ultimately on renting a property. So either way, this is costing the consumer.
Yeah, that's something that I've really seen recently, and it makes me kind of question. Um, Although that's happening to a lot of people in a lot of different areas, where are some places in the market where you can look to for refuge as an investor, or where you might have seen your home property actually increase over the last couple of years? Obviously, we know in the long term, property values have appreciated, but
Yeah.
really, since I would say a little bit after COVID, things have went stagnant, have they not?
Um, I would say recently they have the kind of, and I wouldn't say stagnant necessarily. There has been definitely an increase in property values still, but we saw the largest jump after COVID because there's a lot of money. Basically, we not free money, but you can almost say there was a lot of free money coming in from government subsidies out to the consumer. And so a lot of these people were using those subsidies to be able to afford one of these loans and afford one of these houses. And so when that stopped, yeah, the rapid growth in the price of property, it definitely slowed down, but it is still growing. I was reading the other day that they still expect 2023 to be on the positive end. So house prices aren't going down, and I don't believe they're going down anytime soon. But they have definitely stagnated in their growth. They're still growing at a lesser percentage.
Yeah, yeah. As a matter of fact, I saw, and I don't know if this is correct or not. I have the graphic on the screen. This is from the National Association of Realtors. That actually home prices really hit their peak a couple of months ago, and they're kind of somewhat stagnating, just like you described. And
Yeah.
I wonder, do you see with the way that things are going, do you see more of a how would I say, like institutional investor opportunity for people who do have the big money, for people like REITs and other different types of stocks where they gather funds to actually buy up property?
So that's one of the reasons why it has increased at the rate that it has. There's big um, companies, BlackRock is one that comes to mind, that has actually been investing in tangible assets, which really breaks down to property. And so these companies, they've been investing so that way they're able to be able to have a steady supply of income or revenue coming in month after month, as they predict that the economy may take a downturn, or at least the consumer economy may take
Yeah,
a little bit of a dive. So
yeah,
with that being said, investors are buying these properties, which in turn is actually continuing to keep that trend of positive growth going. um, but in reality, if I was an investor, I would be looking in particular areas. So, for example, we may have talked about this earlier, but
yeah.
there's actually a huge number of people leaving New York and California, and a lot of them are coming to Florida. So, I have some stats up on my screen. Um, so, basically, there's about 5,000 to 6,000 New Yorkers switching their driver's license to Florida every single month. So
That would
through the
explain
year,
all the bad driving down in this area.
yeah, I agree. But with that being said, that means that there's a huge amount of growth, and that's just from New York. So about 50,000 moving from New York to Florida every year. That's not including Washington, Oregon, and Pennsylvania, which in total in a calendar year there were 321,000 licenses that came outside of the state. And the unique thing about this is these were all trade licenses. So that doesn't really include people who are retiring and moving down here. That includes a lot of people moving here for better business opportunities. So if I was an investor, I'd be looking in one of these hot growth areas. I think
Yeah.
I believe there may be. a chart there. I'm not sure if you see it,
Yeah.
but
Well, I just put it up on the screen. One of the things that I noticed in prepping for this show was just how many Florida cities we see. Obviously, you and I live in Florida. We know the state
yeah,
pretty well. You see places like Jacksonville, Tampa, Orlando, even a place like Sarasota, where, if we're being honest, prior it was known for like an Amish population. You
yeah.
look around and you see growth happening everywhere. Another big place, Texas as well, which really is surprising to me. But needless to, I mean, it just to me it seems like it's about 4,000 degrees too hot there, if you ask me.
Yeah,
But
that's probably true.
so
And I know they have nice beaches, but is it like Florida? I don't know.
yeah, I don't know. For the people out there that are watching, and they are on, let's say, a fixed income, or they don't have $1 trillion like the average person in the United States, someone who's on a working salary, what are some things that they can do to set themselves up in the next couple of years to buy a home at a decent rate where it's not $1 trillion in interest or $1 trillion in property value? Would you advise going into the market right now, considering that prices are at a pretty much historical high while interest rates are also at a like 15-year high? What do you recommend to the average investor?
So, if we're talking about investors, I believe that
The average single family, someone who wants to raise their
okay,
family
like a
with a house.
single family person. Well, if that's the case, a lot of people give the advice, well, wait until the market resets or wait until the market crashes, that sort of thing. I don't necessarily think that's a practical solution, especially when you're talking to a family that wants room to grow and they want to expand their family, they want to have a yard for the dog, they want to be able
Yeah,
to play catch in their backyard. You can't do that in an apartment, right? And
yeah,
so, um, you know, if you could wait, I probably would wait just to see how things play out in the market. Nobody has a crystal ball, but I would probably expect there to be some sort of a reset happening with, maybe within the next year or two. However, if they are in the market now, the number one thing they need to do is to work to have a conventional loan, which starts at around 10% or 20%. What I've seen a lot of people do in the industry right now, they take a FHA 3% down loan. Well, when you get that loan, you usually typically look at something that you can't, you know, afford typically. So you
yeah.
might have the loan, you might be approved, but you could get yourself into trouble having a big payment. And in addition to that, those FHA loans have a thing called PMI, which is mortgage insurance. What is
Hmm.
PMI? Well, basically, it's just an extra fee that the bank makes you pay, usually $200 to $300 a month, just because you haven't reached that 10% or 20% down conventional loan status. And that insurance is pure profit for the bank and it goes straight in their pocket. So,
I
my
think it,
recommendation would be try to get down as much as you can on a down payment. And if you have any extra income, maybe look to kind of take care of some of those expenses beforehand.
yeah, no, I think that's really sound advice, especially what you said with waiting. Like, obviously, everyone wants to wait, but if I keep on waiting for another 5, 10 years, you're 35, 40 years old. By then, you'd hope to have
Yeah.
kids and all these different factors. So I really do hope that the market corrects for the average everyday American who goes out there and wants to really have a comfortable home. Thank you so much, Blake, for bringing your insights to us today here on Thinking Property, and I really do appreciate you for all your wisdom. Thanks, Blake.
Thank you. Have a good one.
Yep, you as well.